Keeta, or the KTA token, is fascinating. Very few people had the asset on their radar, but now within just 2 months the price more than 4x'd. The question is, how much longer can this rally last? How much more upside potential is there? Let's have a look at the on-chain data, the data most people are not considering. Now, I've already published a video on Keeta 2 months ago. That was when we were at 15 cents. And now we moved from 15 cents all the way to 61 cents. But interestingly enough, very few people watched that video. So the video performance is this blue line. The average video is the gray area. So it was a strong underperformer. Very little attention on the token at the time. But let's see whether or not this changes with this video. Because now Keeta is the 6th largest trending token on the base chain. It's already got 11.6 million of liquidity. There are more than 70,000 wallets on chain that hold the token. Now, not all of those wallets are created equal, right? Some of them hold just a few cents of the token, while others hold maybe hundreds of thousands of dollars worth of the token. Indeed, the token distribution is far from balanced. A single wallet holds 60% of the token. Now, why is that? It's because of tokenomics. Those are still locked tokens that will get unlocked over time. And here's information about the tokenomics. So we've got 37.5% that's currently unlocked and the rest being locked. Here are the unlock events, a lot of them being linear, as in we are likely going to see constant sell pressure, but that sell pressure will start on the 5th of June and it will go to the foundation treasury. The early investors and the community get their unlock in September. This is then how that looks like over time, so a linear vesting schedule. There are regular unlocks, the supply will grow over time. But let's have a look at all of those other holders. Why is Keeta actually going up? Are there so many people that currently buy into the token, or is this manipulation potentially by a few whales that buy up all of the supply? Let's first have a look at what happened in the last month, where the price more than 5x'd, so an increase of 408%. What we're seeing over here is the number of first-time traders versus recurring traders over time. And on the right side, that's normalized to 100%. So every day we see more returning users than first-time users, but both of those metrics are increasing over time. There is growth. What's also good is that the ratio of new users to returning users is growing. Maybe not for the very last data point, but we can ignore that data point because today has just started. What we are seeing here is that there's a lot of accumulation by the small retail investor. So we've got small retail on the left, we've got the whales on the right, and we are counting the number of wallets. So to be counted for this chart on the left, a wallet has to hold at least 2,000 KTA. So at the current price, that's a bit over $1,000. And we can nicely see how once the number of retail investors grew, how the chart started going up. So the rally started around the 8th of May, and this is also where the accumulation started. We see a similar kind of accumulation for the chart in the middle. So that's now a minimum holding of $10,000. It's not as quick as small retail, but still some accumulation. It's roughly 10% in the matter of 10 days. And then the number of whales is constant. So the whales are not dumping on retail, at least yet. What I believe what the whales are waiting for here is a listing on more centralized exchanges, potentially even a listing of perpetual futures, because then active trading is much easier, it has less slippage, and then it crashes the market less when some people exit with larger quantities. Let's have a look at the on-chain metrics for the all-time chart. Initially, a lot of accumulation by small retail, then that stopped, then the secondary wave. We see how the secondary wave was more muted for medium-sized retail, and we can see how for the whales, there was no increase in number. So again, it's $1,000 worth of holding on the left, 10,000 in the middle, and 100,000 on the right. And so how much more upside potential is there? Since we've already come up that much, can we see another 5x or another 10x from here? Let's play with the idea that this will be a real-world asset narrative driven token. Within the real world asset space, Keeta is still quite small. It's got a market cap of 250 million. That's still smaller than Mantra DAO that has crashed by more than 90%. It's also only 1/4 of the size of XTC. It's less than 1/10 of the size of Ondo. And so even though I don't believe that we are going to see a quick 10x from here, seeing another doubling or tripling is definitely possible, especially since the small time holders are accumulating that constantly. If this graph continues to go up and the whales are not suddenly dumping, we're likely going to see an increased price. So what I'm looking for is some kind of news of a listing on a centralized exchange. Usually those kinds of of news will also push up the price one more time because of a potential additional demand, but then probably the volatility will increase and then it makes sense to potentially sell. At least for the short term, right? I'm not saying what's going to happen in the next 5-6 months because again, the tokenomics are not necessarily great, but if we do see a listing in the next few weeks and then the price spikes one more time, it might make sense to sell exactly at that point. Now let's zoom out a little bit and have a look at the macro picture. We actually see an expanding crypto market, money flowing into the market since October of 2023 already. We know this because of this data over here, the stablecoin market cap. It's currently going up. Before October of 2023, it tended to go down. And the way this data is generated by looking at the minting and the redemption of stablecoins. So fundamentally how this works is when you deposit your hard-earned fiat currency to a centralized exchange, then that centralized exchange will send over the fiat currency to a custodian, to a stablecoin issuer. And that custodian, so be it USDC, so Circle, or Tether for USDT, that custodian will hold the funds in a dedicated account and then will create tokens. So that's what's happening when this chart is going up. Whenever you're withdrawing your funds, then of course the custodian has to release again the fiat, send it over to you via the centralized exchange, and that's when we go down. And there's a reasonable case to be made that the more money is in a system, the higher the prices should go. Have a look at this. This is Bitcoin since October of 2023. And the largest drawdown we have seen while money was still flowing into the market was 28%. But again, when money is flowing in, those dips tend to get bought up. Now, what are those green circles over here? They appear after a price rally. It's an indication when there's a lot of attention on crypto. So there was a spike in search interest for Bitcoin at the beginning of March of 2024, but also at the beginning, middle of November of 2024. So that's what's highlighted with those bubbles. The masses tend to be late. The masses tend to buy after a price rally. And that's a problem, right? Most people enter crypto when prices are high and then potentially comes at least a short-term correction. And then a lot of those people that got excited about Bitcoin first have to ride through that correction. It can be minor, since currently the market still expands, but it can also be major, of course, as we have seen with prior attention spikes. And so there are two fundamental forces that move the crypto prices. First of all, it's the money in and outflows, but it's also the swapping activity. So once there's capital in the system, people tend to swap in and out of Bitcoin, but also in and out of the altcoins. And whenever we deploy, say, $100 worth of stable coins, the market cap of a crypto asset rises more than that. There is some inherent leverage effect. And that means we can measure how much the market is currently risk on or risk off. What we've got over here is the stablecoin dominance. So it's not the stablecoin market cap, it's the stablecoin dominance. It measures how much of the entire cryptocurrency market cap is currently in stablecoins. When this is very high, the market is risk off. So a lot of the market cap is in stablecoins. When this is very low, the market is very risk on. And in the last 1.5 years, we tended to trade in a range between 5% stablecoin dominance and 9% stablecoin dominance. And surprise, surprise, when the stablecoin dominance is high, it means crypto prices are very low. When the stablecoin dominance is low, crypto prices tend to be high. So interestingly enough, whenever the stablecoin dominance is low and when prices have already gone up, that's when the tourists enter and first get burned. So we want to be counter-cyclical. We want to sell when stablecoin dominance is low. We want to buy when stablecoin dominance is high. And it very much looks like we are currently on the way to seeing more stablecoin deployments. In other words, the current positive rally is probably going to continue. I don't have a crystal ball. It's just the way how I interpret the data. And then the question is, does it make sense to just buy Bitcoin if we expect prices to go up, or should we rather go with the altcoins? Now, some altcoins can do phenomenally. Others tend to underperform. But let's have a look at, for example, Virtual. Virtual went up by almost 3x in the last month. But I think it's better to try to find those altcoins very early, So the real gains had been made in the early days, right? When we look at the all-time chart of Virtual Protocol, those gains are immense. 20,000%. And so the life-changing money is not necessarily just in riding the current wave and buying a broad basket of altcoins. It's trying to find approaches to get into those altcoins much earlier than most. And I think a very good approach is to look at people that tended to buy well-performing assets early in the past. So for example here, right, this is Brian Young. He bought the Virtual Protocol token at 7 cents. And that was on the 21st of March 2024. So that's over here. We subsequently saw a rally of more than 6,000%. And so here's his YouTube channel, right? He's got more than 2 million subscribers. It of course begs the question, is Brian Young just more skilled, or does he have sufficient impact on the prices? Because maybe some of his following is buying into the token as well. I don't know, but it's always valuable to know what those kind of people are doing. The way how we knew about Brian Young buying into the token at that time was not because he announced it that early on his channel. It was because we track his wallets. We've got 5 of Brian Young's wallets. In total, we track almost 600 influencer wallets. So we've got also wallets by Alex Becker. He's got 1.6 million subscribers. We are also tracking the Crypto Banter channel. They've got 1.2 million subscribers. And again, I think it makes sense to be very early with the insiders and with the people that move the market. Now, of course, not every single token that's purchased by an influencer is going to rally. Some tokens are just bought and never announced on the social media, so we don't have the purchases by the following. But if you want to have a chance of being early, if you want to get the 10 or 20x returns, we can't just buy what's already big, right? We have to buy the things that the smart money is buying as well. And so here are a few examples of trades that our community has made. We discuss the influencer trades. We discuss potential opportunities to bet on rising, but also to bet on falling prices, depending on market conditions. And so, of course, we track our influencer wallets, but there's also a tutorial section on just how to find those influencer wallets. There are various approaches through NFTs, through related transactions, through deposit addresses on centralized exchanges. There are 8 tutorial videos in total. And so then the community is trying to figure out what wallets that we are not yet tracking can we potentially add to our bot. So there's a dedicated wallet research chat. We've just added influencer Chicken Genius. And then every day we get signals when influencers buy and sell. Selling is also important, right? Most people don't publish when they sell. It's very interesting. Some people just buy, publish a video on an asset, and then sell just a few hours afterwards. They're literally pumping and dumping on the audience. It's quite nice to look behind the scenes. And so feel free to check it out. It's down below. It's thebitcoinstrader.com. Currently the price is $125 per month. It went down because search interest in crypto is now rather low. Once we are up again, the price of course will get increased, but not for the people that are already subscribed. So once you sign up for $125, that price is locked in. So here's my recommendation. Don't wait until attention is again at those heights. We are still early. The market is expanding though. Macro is positive, but you don't want to wait until the rally has already happened. Right now, attention is still low. The rally is likely going to continue. As said, there's still money on the sidelines. The stablecoin dominance has room to further fall, which will result in rising altcoin prices. It's just about figuring out what altcoin has most upside. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. The link is down below, thebitcoinstrader.com. There should also be a link directly here on the screen where you click on that link, then it will lead you directly to the page. See you next time. Bye-bye.